A very good morning, ladies and gentlemen. Thank you very much for tuning in bright and early. Welcome to the Digital Banking Symposium 2020, co-organized by the Singapore FinTech Association and the Banking and Financial Services Union. My name is Anand and I will be your host for this symposium. This two-day symposium aims to help attendees deep dive into and explore the impact that digital banks will bring to Singapore and the ASEAN region. We will have a power-packed agenda and lineup of speakers today and tomorrow. To kick off this symposium, I would first like to invite Mr. Chia Hock, President of the Singapore FinTech Association, to make his welcome address. Mr. Chia, please.
Good morning, Brother Meng, Secretary General NTUC, Sister Annie Lee, President, Banking and Financial Services Union, Brother Patrick Tay, Executive Secretary, BFSU, ladies and gentlemen. I'm glad to be here today to join you in this Digital Banking Symposium, co-organized by the Singapore FinTech Association and the Banking and Financial Services Union. First of all, I would like to thank our sponsors for making this event possible. I'll start off with our grand sponsor, Wray, followed by the gold sponsors, the Equity, Aerom, Clifford Chance, FICO, Finastra, Global Financial Services, and R3. 5 years ago, when Singapore started our Smart Financial Center journey, and when Singapore FinTech Association was set up 4 years back, when there were less than 100 FinTech companies in the entire ecosystem. Today, we have more than 1,000 FinTech companies, employing more than 10,000 workers. We have more than 40 financial innovation labs operated by the incumbents, and more than 150 venture capital firms. We have gone beyond hype to become a leading FinTech capital. A few months back, I had an interview with Nikkei Asia. I shared with them 3 defining characteristics of the FinTech ecosystem in Singapore. First, we have a lot of international founders who find Singapore conducive to start their entrepreneurial journey. And a lot of them also find Singapore the perfect place for them to expand their venture. And along the process, they created jobs for the locals. Secondly, more than 80% of our FinTech companies here are B2B or B2B2C. This is because Singapore is a renowned international financial center with more than 200 banks and more than 7,000 MNCs. Thirdly, more than 80% of our FinTech members operate beyond Singapore, either in the region because of the fast-growing economies, or beyond the region to support the operations and businesses of the international banks. With the upcoming digital banking license regime, I think we will be ready to start the next phase of FinTech development in Singapore. We have plenty to learn from digital banks elsewhere, and we will need the international expertise to run successful digital banking operations in Singapore. Many of the successful digital bank applicants will likely to collaborate with the existing pool of B2B FinTech companies in Singapore. Last but not least, ultimately, a lot of the digital banks will have ambition beyond Singapore, operating in the region. What does this mean for the consumers and the businesses? You will be in for a treat in the short run. You will get higher interest rate for your deposits or lower interest rate for your loans, a much better customer experience. But in the longer term, the financial services industry in Singapore is going to be more dynamic and exciting. To help you navigate these complexities, today we will also be launching the Digital Challenger Bank Report, a collaboration between Singapore FinTech Association and the Boston Consulting Group. Many ask me about the impact of COVID-19 on FinTech. I'll be frank, in the near term, our FinTechs face challenges in terms of delayed projects or even challenges in their funding. But COVID-19 has also enhanced the prospects of FinTech over the medium to longer term. We have seen increased adoption of digital finance by consumers of all age groups and businesses of all sizes. Even the financial institutions are doubling down on their digital transformation journey. We have been seeing more and more good news in the sector. This year, we are likely to exceed in terms of FinTech investment compared to the whole of last year, which was already a record. One of our members even reported that they have stopped cold calling customers because incoming inquiries has shot up by more than 10 times for requests to modernize their digital payments systems. And our big four consultancies are busy with queries on digital transformation projects. And I heard some even turn down new customers. Let me conclude. While many say that COVID-19 is the crisis for the generation, but it has also generated many new opportunities, especially for the FinTech sector. Recently, we saw news from ByteDance, which is investing billions in Singapore, and from Tencent, which is moving their regional HQ to Singapore. So Singapore is fast becoming a safe haven and hub for the new economy organizations. There will be more and more services in Singapore and in the region. In order for our FinTech companies to seize all these opportunities, they will have to be nimble, they will have to have a collaborative mindset, and they must be future relevant. Let me pull a quote from the champion boxer Muhammad Ali, which incidentally is the tagline for our Digital Challenger Bank report. Have a desire, have a dream, and have a vision. Be a champion FinTech. With that, let me wish you a pleasant day ahead. Thank you.
Thank you so much, Mr. Chia. Next up, we are humbled to have our guest of honor for this symposium, Mr. Meng, who will be making his welcome address. Please do allow us just a couple of minutes while we make our preparations. Do stay tuned, and we will return to the screen shortly. Welcome back, ladies and gentlemen, to the Digital Banking Symposium 2020. Next up, we are humbled to have our guest of honor for this symposium with us here today. I would like to invite Mr. Meng, Secretary General of the National Trades Union Congress, to make his welcome address. Mr. Ng, please.
Thank you. Good morning, Brother Hock, President, Singapore FinTech Association, Sister Annie, President, Banking and Financial Services Union, Brother Patrick Day, Executive Secretary, BFSU, ladies and gentlemen. I'm glad to be able to join you at the Digital Banking Symposium 2020 today. Just a few months back, during the circuit breaker, where things were a lot more gloomy, where there were no cars, no people in one Marina Boulevard where we are today, there was a meme going around, and it was asking a very simple question. Who is leading digital transformation in your company? Was it option A, your CEO? Option B, your Chief Technology Officer? Or 3, COVID-19? 3 C's. Well, the answer was obvious, because there was a big red circle around COVID-19. Yes, indeed, we all know the challenges that COVID-19 is presenting to not just Singapore, not just ASEAN, but to the world. But at the same time, COVID-19, in its ironical way, has forced companies, whether you're big or small, to embrace technology and the possibilities of digitalization to bring companies to new markets, new ways of doing things. Even traditional retail shops are going online to sell their products. Yesterday, I had lunch at a hawker center, wonton noodle. I was offering to pay because I was with a friend, and this friend whipped out the handphone and beat me to my cash, because he just zapped on the QR code and he bought me lunch. Hawkers are transforming. The digital possibilities, if you look at not just Singapore but in the region to the world, is immense. Because even the older generation that were obviously adverse to technological change, settled in their comfort zone, are getting out. These are the possibilities of what COVID-19 is bringing to us in a rapidly changing world. People's mindsets, people's willingness to adapt are so much more than just 8 months ago. Yes, there are many challenges that we have in Singapore, like in our aviation and aerospace industry. The hospitality sectors are all hard hit, and the road ahead is still bumpy for them. But yet, at the same time, I'm glad to see that there are bright sparks in our economy as well, especially in the banking and financial sector. It is still growing at 3.4% year on year in the second quarter. And according to the preliminary findings from the Singapore FinTech Association's own internal survey, well, most FinTech firms are still bullish on expanding your businesses and your workforce. So I do encourage you, while there are some looming dark clouds in the world today, second wave, maybe even third wave of COVID-19, there are still possibilities in your sector to make good and to lead the recovery when it comes. Well, as I said, amidst crisis, a new chapter is opening for the Singapore financial services sector, for both companies and for workers, including our PMEs. And in my speech, workers, I take it to be all callers, whether you are PMEs or rank and file. These are exciting times with the challenges and coupled with opportunities. Just last June, MAS, the Monetary Authority of Singapore, announced that it would issue 5 digital banking licenses to non-bank players, also known as the digital challenger banks. No, not 2 months later, MAS kicked off the application process for these licenses. And even in the midst of COVID-19, we hope that these digital banks will continue to push and really start operations by 2021. With time, we will definitely see, in my view, fewer physical banks and more digital banks offering digital services as companies, as people desire more convenience through technological and digitalization efforts. Just simply to keep up with this trend, there will be many opportunities like what Hock said for SFA, BFSU, and all of you out there. This will also mean that there will be a great impact on jobs and workers. Finance professionals, you may well need to broaden your knowledge beyond what you are currently doing, increase your digital capabilities, and deepen your expertise in areas like data analytics. We may also well see heightened demand for jobs in the areas of UI/UX design, application engineering, and cloud architecture. In fact, NTUC ourselves, we are embarking on these digitalizations since last year. And in keeping up with Industry 4.0 standards, well, I hope when your companies successfully transform, you will not forget our workers. Because Industry 4.0 and partnered with Workers 4.0 or PME 4.0 are the key ingredients to success. The earlier you couple these two together, when you explore technologies and digitalizations with a skilled workforce, you heighten your own probabilities of success and seize new opportunities. So therefore, I would urge all of you today in this symposium to invest in your workforce, redesign jobs where necessary, train our workers in tandem so that your business transformation can get on track at the fastest possibility. With skilled employees, you know you will enjoy higher productivity and better returns. And with employees equipped to take on higher skills role, this also will be a win-win situation for workers that we represent. When there are better business, it will mean that our employers will be able to give better wages, better welfare, and importantly, as a sector, I would like to see you grow in business so that my workers, PMEs, all rank and file, can have better work prospects in the future as well. So I'm happy to see that banks in Singapore, some banks in Singapore already recognize this and are helping their workers embark on this technological journey together. DBS Bank, for example, have reskilled more than 500 contact center employees to take on new roles in the digital transformation. As Hock was mentioning, many of these contact centers have dropped volumes, and there are new opportunities for them now to train to be digital ambassadors, whether it's encouraging customers to use digital banking, rather to use the bank's digital channels or other areas of needed work. Citibank have also launched a professional conversion program to help 400 workers stay tech-enabled, introducing roles such as data intelligence and automation manager, as well as the digital engagement advisor. Standard Chartered Bank has been working with BFSU and have sent more than 100 workers for a FinTech foundation program. All these are steps in the right direction to couple Worker 4.0 with Industry 4.0. NTUC thankfully took a chance too some years back with SFA. 4 years ago, 3 years ago when I first met Hock, we say that this is an area of growth where there will be new opportunities and perhaps also new vulnerabilities for our workers and PMEs. And I'm glad Hock and his team affiliated to NTUC, and now we can explore opportunities together and seek out areas where it will benefit your business and benefit our workers. So I do encourage in the journey ahead for many of you here, your companies to work closely with the tripartite partners, whether it is the labor movement or government, so that we can foremost, help your businesses succeed. And in turn, I look forward to you helping our workers have better wages, better welfare, and better work prospects. And to the many of you that are PMEs attending this symposium today, I know you have been affected by a shrinking economy in Singapore as well. In these challenging times, NTUC is committed to be alongside you, to where you need, adequately protect you, and where you need, enable you in a journey of skills discovery, skills upgrading, so that you can maintain your relevance in this industry and hopefully up your value also in this exciting sector. Last week, I shared updates on the joint NTUC Singapore National Employees Federation's PME Task Force, which would be looking at ways to better protect and enable PMEs, especially those that are in the 40 to 60-year-old ages. In the coming months, the task force will engage PMEs and employers across different segments to identify the PME's key concerns and needs, gather the feedback firsthand from employers on potential skill gaps and possibilities for them in the workforce, work with relevant government agencies to review policies where needed, and conduct research on future trends, jobs, and skills in formulating actionable strategies to prepare PMEs for employment opportunities and overcome challenges. We aim to put up a set of recommendations to our government as well as best practices for companies and training, hopefully by the middle of the year 2021. In conclusion, my friends out there, I'm encouraged that many of you have taken the proactive step of participating in this symposium, whether it is to deepen your industry knowledge or to look at new career pathways. To navigate industry disruption and the transformation of job roles, can I encourage all the PMEs and workers in this symposium to keep an open mind towards learning. And importantly, with that open mind, take some actionables to take up some courses to upgrade your own skills so that you can seize opportunities to upgrade yourself, move into new possibilities even within your own sector so that you can enhance your value, enhance your employability as you prepare for the jobs of tomorrow. The world is changing, and with that comes challenges, but importantly in Singapore, it affords new opportunities if we are agile, if we are adaptable, and we can come together with an action plan to seize these opportunities, overcome the challenges. I know you can, because Singapore has always been built upon new ideas, breaking out of even successful paradigms so that we can embark on new journeys of success. And in the FinTech arena, with all of you and with SFA, Hock in the ring, I'm sure you will maintain your agility, your innovation, your flexibility to conquer and to seize opportunities. So I wish all of you a very good symposium, and I look forward to seeing all of you face to face once more in the near future. Thank you very much.
Thank you so much, Mr. Ng, for an inspiring address. And thank you for gracing the symposium today. Next up, we will be commencing the launch of the Digital Banking Reference Document. This document is presented by Boston Consulting Group and the Singapore FinTech Association. Presenting this document on behalf would be Ms. Pauline Wray, Managing Director, BCG Expand Research, FinTech Control Tower. And without further ado, I would like to invite Pauline, please.
We have entered a new decade where COVID has accelerated the shift towards an online society and existence, with financial services as one of the key pillars. We've had the great pleasure to work with the Singapore FinTech Association in our inaugural partnership report, Digital Challenger Banks, a Desire, a Vision, and a Dream. The title comes from a quote from the boxer Muhammad Ali. Champions aren't made in gyms. Champions are made from something they have deep inside. A desire, a dream, a vision. After speaking with over 40 founders and venture builders for this report, what was clear was the drive, that passion, that motivation, that vision and optimism to have a positive impact in the future of banking. Instead of doing a white paper, we thought with Hock, and Joshua from the Singapore FinTech Association and the team at the BCG FinTech Control Tower to give it a special format, a reference document providing a taxonomy to identify the variations of digital challenger banks today, where we look at the rise of digital challenger banks, regional variations and regulatory drivers, go-to-market strategies, and then we bring it back to Singapore with the potential future state. Shifting customer expectation and a drive for financial inclusion and technology developing are enabling digital economies. Key traits of digital challenger banks include, first of all, they're mobile first. They build innovative products and features for consumers. They bring more personalized competitive pricing and better customer experience. So much so that over the 10 years, we've seen the number of global digital challenger banks increase rapidly, two of which 200% since 2015, in part also encouraged by regulators introducing digital challenger banks related policies. Globally, we have 45% of these digital challenger banks in the Americas, 35% in EMEA, of which the majority in Germany and the UK, and 20% in APAC, of which the Australian market has the most number. In this reference document, we focus on the challenger to the incumbent, otherwise known as Digital Challenger Bank. Within this group of players, there are challenger banks and neobanks, where challenger banks hold a banking license like Revolut, Starling Bank, Grasshopper Bank, and Kaukai Bank, and can be further differentiated by the entity type, startup versus an established non-financial corporate. Neobanks, on the other hand, are typically startups and do not have a banking license, such as Chime, Moniz, Banking, and Aspire here in Singapore. Instead, what they do is that they partner with a license holder or leverage another license type to provide bank-like features. Regulators, they've been increasingly active on banking licenses, really facilitating the market entry of new players. It goes back to 2016 in the UK with the new bank startup unit. Then we had Australia 2018 with the ADI restricted license. Nice. Then we had Korea, the special on internet-only banks, and Hong Kong virtual banking guidelines. In the region, Singapore was the first mover with its digital banking license to be granted later this year. And other countries, such as Malaysia, are about to follow suit with a draft policy on digital banking license. There are factors that unique to each market that have shaped the digital challenger model. For example, some key observations. In the US, you have a higher presence of neobanks leveraging bank partnership. This is really because they're still developing a digital banking license regime. It's a very fragmented regulatory landscape, and a regulation license is hard to obtain. There's also a high availability of banking as a service providers, partnering with fintechs to go to market. UK, Australia, there's a higher presence of fintech startup challenger banks, due really because of the presence of digital banking licensing regime with open path to application. APAC, On the other hand, we see a higher presence of non-FI consortium-led challenger banks, many of whom ecosystem players or super apps. We see this model coming to Southeast Asia region as well. In Singapore, incumbent banks have been upgrading their technology capabilities to cater to a new generation of digital savvy customers over the years. Take, for example, DBS, launched a digital banking solution, DigiBank, in Singapore in March 2016, but also launched a DigiBank in India in April 2016 as the first mobile-only bank, and in Indonesia in 2017. OCBC launched a mobile payment app, OCBC Pay Anyone, in 2014, and UOB has launched a banking app, UOB Mighty, in November 2015, but also launched a mobile-only bank, Tomorrow, in Thailand in February 2019, and Indonesia in 2020, with plans to launch in Malaysia and Vietnam. Singapore, as a first mover in the region, where the MAS is granting 5 banking licenses by the end of 2020. There are 3 main objectives for this: improve financial inclusion, drive innovation, and encourage competition. There'll be 2 types of licenses: digital full bank and digital wholesale bank. We'll be granting 2 digital full banks and 3 digital wholesale banks. We believe that these consortiums who have been attracted to this license can bring strong combined propositions, value propositions to the banking landscape in Singapore and beyond, because they're coming from non-FIs industries in addition to telco, retail, e-commerce, ride-sharing, and online media. They will leverage access to existing consumers, access to SMEs, their digital users already, and their frequency of interaction that they already have with them, but also the richness of data that they bring. The opportunity in Southeast Asia is great, as the market is set to grow rapidly. On the one hand, the GDP of major Southeast Asia countries like Indonesia, Malaysia, the Philippines, Singapore, and Thailand could reach $4.3 trillion by 2030, which would make it the 6th largest economic bloc globally. In terms of population, with 542 people, by 2030, they will only be behind the EU, India, and China. Banking penetration in Southeast Asia still very low. In countries like Vietnam, Philippines, and Indonesia, where more than 50% still do not have access to financial services. But mobile internet is enabling access to financial services. Number of smartphone units sold in Southeast Asia annually is expected to hit 114 million by 2022, with the largest increase in Indonesia. As a result, we see a great opportunity for the future of banking in Southeast Asia and a thriving fintech ecosystem. We really hope you enjoyed the reference document. It was a pleasure to do with the Singapore FinTech Association, and thank you for your time.
Yeah, I'm okay. Yep. Thank you so much, Pauline, for preparing that informative presentation. Ladies and gentlemen, thank you for staying tuned. Once again, welcome back to the Digital Banking Symposium 2020, co-organized by the Singapore FinTech Association and the Banking and Financial Services Union. We will now be presenting the launch of the ASEAN Digital Banking Report by Boston Consulting Group, Singapore FinTech Association, and Finastra. The report is themed Digital Challenger Banks in Southeast Asia, Disruptors and Accelerators. I'm privileged to be joined by 5 of our presenters today. We have Mr. Chia Hock, President of the Singapore FinTech Association, Ms. Pauline Wray, Managing Director, BCG Expand Research, FinTech Control Tower, Mr. Greg Krasnov, Founder and CEO of TONIK Bank. And last but not least, dialing in all the way from India, we have Mr. Anand Subbaraman, General Manager, Retail Banking from Finastra. This session will be moderated by Ms. Shweta Jain, Director, Cloud and Digital, Retail and Challenger Banks at Finastra. And without further ado, I will now hand my time over to Ms. Shweta Jain.
I'm going to be your moderator for today's session on Digital Challenger Banks in Southeast Asia, Disruptors and Accelerators. Pauline, thanks for taking us through this report, Southeast Asia Coming of the Digital Challenger Banks. I would like to highlight some of the key findings on the regional landscape, which form the basis of today's discussion. Digital Challenger Banks globally have seen a growth of 27%, with APAC accounting for 19%. Southeast Asia has a huge opportunity to serve the unbanked and underbanked, and you're going to be hearing more on that. 3 key imperatives for digital banks to succeed in the region. Hold on to them till the end of our panel. Be customer obsessed, build and leverage a modern technology stack, explore ecosystem advantages where possible. To discuss this, we have our 4 industry experts sharing their experience. Please welcome Chia Hock, President of Singapore FinTech Association, Pauline Wray, Global Lead, BCG FinTech Control Tower, Greg Krasnov, Founder and CEO, TONIK Bank, and Anand Subbaraman, General Manager, Retail Banking. Thank you everyone for joining me today. Let's start with the ecosystems and how they're shaping the landscape in the region across banks, fintechs, and new players. Pauline, I would like to hear your thoughts on the new business models and value propositions emerging in a connected ecosystem. Consortiums, collaborations, where do you see this headed?
Thank you for the introduction. Thank you for having me. Hock, it's a great start to the today event of Singapore Banking Symposium. So first I just really want to, Shweta, just bring the audience as well to just give a bit more of an overview of this report that we launched together with the SFA and as well Finastra before we kickstart in earnest the conversation. So firstly, just first of all, here when we're focusing on this report, we are looking at specifically at those who are challenging the incumbent bank, and we break them down into 2. Challenger banks, those with full banking licenses, and neobanks, those who either leverage through partnerships banking licenses, or those who have an independent, a different type of banking license. And that's how we're differentiating them here. Again, back to this amazing growth that we've seen, especially since 2015, really with the launch of a number of regulations and policies that really allowed the growth of this new digital challenger banks. 200% in fact since 2015, with that breakdown 45% across Americas, 35% in EMEA, and 20% in APAC. And they have, talking about that ecosystem and the opportunities, They really represent different characteristics across the different regions. In the US, you have typically neobanks, those who are leveraging the banking licenses of partners, either banking as a service or other banks. In EMEA, you have more those like Monzo or Revolut or Starling Bank that have acquired their own banking licenses through the vehicles, for example, that you have, the regulators are made available. In Asia, however, you have these consortiums of non-FI that have also been entering the market. But more and more, as in Southeast Asia, it gets very exciting with Singapore having that first mover with the policy around the digital banking license that we're going to be having later this year. But we do have already some existing digital challenger banks. For example, TONIK, we have this later on the panel. So again, just to give you a bit of an overview, it's not exhaustive by any means, but if you see down at the bottom, Southeast Asia, we don't have a lot of digital challenger banks, but that's about to change through regulations. We have in Singapore, as I mentioned, but more and more we have other regulations coming, being drafted, for example, in Malaysia. Now, the opportunity that you spoke about, this is actually really important because we see the opportunity by 2030, the population in Southeast Asia, the major Southeast Asian countries, will grow vastly, becoming the 6th largest bloc in the world. And also with an economy, a GDP of $4.3 trillion estimated by 2030. And as you can see here, some of these data points that we have, some of the countries have a large unbanked population. For example, Indonesia, Vietnam, and the Philippines. Now, here are some of the regulations, and you're going to see that are conducive and help that launch and make also Southeast Asia a FinTech hotspot. Really regulation conducive to innovation. For example, in there you will see that across almost all of the countries we've had since 2015, regulations, 2012 in fact, regulations around eKYC. Finally, what's coming up next later this year, we have 5 licenses that will be granted by the Monetary Authority of Singapore. 2 full banking licenses and 3 in the wholesale banking license space. And here what we find really interesting is that we have a number of participants who are coming together in consortiums who bring a variety of industry, not just financial services, ride-hailing, e-commerce, and as well, all of them, some of them bringing some digital savvy consumers as well on the retail side, but also on the SME side. Now, we're no stranger, however, to disruption. We have quite a number of a growing ecosystem in the fintech space in Southeast Asia, especially since 2017. You could see that explosion in funding that's going towards our fintechs in the region. The majority of the fintechs here, they fit between payments and lending. Which have really been catering to help our those underbanked and underserved move into that digital economy. And finally, I just wanted to leave as well with some of those key success of key impairments that one needs to achieve. But one that's very important is that modern technology stack, which I think Finastra will talk to us more about. And really 5 points that I'd like to really highlight. One is being cloud native, API-based, modular architecture, automation, so to really make those processes to fully electronic and automated, and finally maintain data usability, which is really key to be able to offer those services. And finally, as we have Greg, we thought we would also show you a bit of a profile, and Greg will talk to us a little bit more about TONIK, on how TONIK came together with not just with Finastra, but with other partners that really allowed it to enter the market in the Philippines.
And I would like to pick the thought on the fintechs and how they're growing as an opportunity in Southeast Asia. Hock, how are fintechs preparing themselves for collaboration across participants in the ecosystem space?
Yeah, I think the fintech rating themselves for this, as many of you would know, about 40 to 45% of the fintech companies in Southeast Asia are based in Singapore, and predominantly they are B2B based. So, which means that they are mostly digital enablers. That put them in a very good position when the digital banks start sprouting out in Asia. I mean, after Singapore, next we will have Malaysia having their own dedicated digital banking licensing regime. So I think the medium to longer term prospect is very, very bright. COVID-19 has turned out to be an accelerator for the adoption of digital finance. And we are seeing that a lot of financial institutions, especially the smaller and medium-sized ones that have neglected in their digital transformation over the last few years, now they are doubling down on that. And we are seeing more and more M&A activities across the region, looking to acquire B2B fintechs that has good potential. Yeah, so I think the next 2-3 years will be very interesting for this space in Southeast Asia. Obviously, even for those that are operating in Singapore, Singapore will not be their only place they will be operating. They will be scaling out into the region, carrying with them the credibility premium for being a Singapore licensed digital bank. Yeah, that's my view. Thanks.
Thank you. So, Anand, over to you. Pauline mentioned the importance of technology. Where do you see the biggest monetization for technology vendors like Finastra in leveraging the ecosystem?
Hi. I think I'm losing you guys. Can you hear me okay?
Well,
Yes,
yeah.
we can.
Okay, thank you. Well, thanks, Shweta, and I think good morning to the panel. It's an honor to be here on the panel, and Pauline, Hock, a fantastic report talking about the bank itself. From our perspective, when we start looking at what a modern bank needs to be, I think agility is the key word. And agility really means that the ability for the bank to respond to customer sentiment, the ability to respond to customer demand, all instantaneously. The ability for the bank to capture, sell products, capture new customers based on data and insights. And this really drives two things. One is that it enhances the stickiness of the bank itself, because the newer bank is going to market, trying to capture a new segment of the population, which could be banking with other institutions, other financial services players, or perhaps their first entry into the financial services world itself. And it's really about the stickiness. How do you grab them? And the very important thing is it's not just onboard them, but also keep them sticky over a lifetime. If you look at the large banks, they've been around for decades. They have built customer loyalty over time. And so the neobanks have to come in with intrinsic technology advantages that was going to say that, like, how do I accelerate that learning curve that the larger banks have done over decades? How do I enhance stickiness of my value proposition? How do I innovative? And do that in a fairly compressed time. If you take a look at what Revolut or Monzo have done, right, or Kakao Bank in Korea, New Bank in Brazil, they've done that economically and at scale. And for this, a very modern cloud landscape is probably the most important piece, or one of the most important drivers. And this really attunes to having a technology stack which is cloud native, having APIs to plug and play into an ecosystem, allowing the ability for the bank to generate deep insights based on data very quickly, run their own machine learning algorithms, what kind of population they want to go after, what kind of products they want to go after. This combination, this trifecta of what I would call as data, fintechs, and cloud is what is really going to drive neobank's success. And so the technology enablers are probably very critical. And what we have done with working with TONIK, and I think Greg would talk about it, is really to build out our Essence Cloud to really focus on this trifecta, which really helps banks come to life faster, be agile much faster, respond to customer sentiments faster, make decisions, enhance stickiness, and have a compelling proposition for all parties through the chain. And the party chain, including the bank itself, the end customer, the fintechs, the investors. Over to you, back to Shri.
Thank you, Anand. That is an interesting trifactor that you mentioned. And there are challenges and opportunities that we have spoken in the report also that are faced by digital challenger banks in the region. So, Greg, it's interesting to hear your story, considering that TONIK is the first digital bank in Southeast Asia. I do want, and I think our audience also want to hear, why Singapore? And how did you maximize technology and the core banking system, working with different partners, and bringing the challenges that you faced when you bring that whole story together?
Sure. Thanks, Shweta, and good morning, everybody. Great to see you guys, and thanks for the opportunity to speak on the panel. Let me start a little bit from the background. You asked why Singapore. We're headquartered in Singapore. We're operating in the Philippines. Our technology team is actually mainly based in India, but Singapore for us remains the product and architecture hub because it's a very unique place where the ecosystem exists and the skill sets exist that don't really exist anywhere else in the region. That's why we're headquartered here. In terms of the success factors, I think Pauline has spoken about a few of these on the global basis. And, I've been in and around consumer finance and fintech for, I guess, about 20 years now. Having co-founded a bunch of other fintechs and been an angel investor in fintechs basically through my whole career and built and sold a bank before. So I think one of the Achilles heel for most of neobanks in the region has been the licensing situation and has been the revenue streams situation. So these are two things that we've actually tackled head on because they're interconnected. Most neobanks around the world, they're offering a great user experience on a current account, but they don't operate on their own bank license. They work with a partner bank. So effectively, they're offering a very limited scope product. The only monetization for that product is basically interchange revenue that you can charge, you get from Visa and MasterCard. That's a very, very vulnerable revenue model, and it's proven itself vulnerable as most of these guys in the developed market, this year have seen their revenue decline because card use decline, because with the lockdowns, people don't go out quite as much. That revenue model has not been able to get most of these guys profitable to begin with. And then this year, the revenues tank further. So that's a big vulnerability. And we've identified that as a vulnerability from day one. So for us, the more sustainable revenue model is lending. To be a proper bank, to do lending, you need to then be able to attract deposits. And to attract deposits, you need your own bank license. Because a partner bank generally will not allow some neobank fintech partner to use its government-insured deposits to lend out under who knows what kind of credit policy. So having your own bank license really gives you the ability to execute that kind of business model where you take deposits and make loans. And that's what we've kind of bet the house on. That's actually the reason we're in the Philippines, because Philippines here in the region, I think, has one of the most open-minded and willing to experiment regulators in Banco Central, which is the central bank and the regulator of the banking sector. We've been able to structure a relationship with Banco Central in which we are a pilot project operating under a rural bank license, but in a special regime that enables us to run a fully digital bank business under that license, while the central bank is developing the regulations for a full-blown digital license, digital bank license. And ultimately, I guess we'll need to transition into that regime. But it's kind of a pilot project, and none of the other regulators in the region have done a pilot like this. So that's been very helpful for us, and that's why we're there. We're currently in beta, and we're planning to come industrially to the market in the first quarter next year. Very, very exciting times for us, as you can imagine. Philippines is hugely underbanked market. Close to 70% of the population doesn't have access to banking services. Digital is the way that this is going to get fixed. And yeah, I think we're experiencing some sound issues. So perhaps the moderator could see if somebody can be muted. We're getting a haircut. So on most of our tech stack, we're working with third-party vendors, including Finastra on our core banking. We're fully in the cloud, and the only things that we're keeping development in-house is what we call the digital layer, the UX layer, and a couple of the op stack elements that we'll need to iterate quickly to maximize our customer experience and operational efficiency. Everything else we're basically vendoring in. So Finastra has been a fantastic partner for us, and thank you for that partnership, and Shweta. It's been great working with you guys.
Thank you, Greg, and exciting times ahead indeed. You talked about the revenue model and how that changed because of the COVID. So, Pauline, just wanted to ask you, what do you think the new normal has been, looks like and is brought by the crisis?
Yeah, so I mean, I think what's been really clear as well, especially for those who have been underbanked and underserved, is that to be able to have access. So we spoke about, you know, all of a sudden the whole world was locked down and we had to access some of our basic services and needs through digitally. And in some instances, you have a whole segment of the population, especially in Southeast Asia, that is not able to make payments or receive payments digitally. So I think as a result, we saw quite a lot of uptick actually on your mobile and digital wallets, especially in countries like the Philippines, like Indonesia, taking up to 1/3 of the total payments transactions. Or estimated to take up to 1/3 of the total payments transactions in the coming years. And that's really where the opportunity has been. I mean, I often tell the story that when March hit, and for example, some of the domestic workers here were not in a position to go and to make, you know, that monthly transfer to the Philippines or Indonesia or Myanmar. We then, working in FinTech, I actually contacted a few of our FinTech payments, including Neum, and wanted to find out, you know, how do we make this transfer more seamless, and do they exist? And very quickly, actually, especially like the likes of Neum, we're able to set up those transfers for this segment of the population, and that really created, so I think in that instance, it wasn't really competing actually against incumbent banks, it was actually competing against cash. So that market share, I would say that some of these e-wallets and digital wallets took, it was moving from cash to digital and give the opportunity to the population to enter this, to be part of this digital economy.
Thank you, Pauline. Interesting. Yes. And Anand, where do you see that the biggest monetization for technology vendors like Finastra's happen? So how has this changed the digital transformation priorities and roadmap for banks in the region?
So look, I think in the region globally as well, but what we've seen very quickly when things were unfolding in March, we had a lot of requests from clients who wanted to move things like mortgage mortgage onboarding to do it digitally. So we contacted a number of fintechs that played in that space to do some POCs and give the ability for our clients to onboard clients digitally. But also insurance companies, it's been years for agents to onboard clients through your signing many paperwork to be able to sign to a new policy. And now all of that has really moved towards to be able to do it in a digital way. Especially, I think, like in places like Singapore, we have our digital identity. We have the ability to do things through SingPass and CorePass, and that has really accelerated. And Singapore has shown the potential of what you can do, especially with the lockdown that happened earlier this year. But potentially for other countries to learn from as they're going through. We mentioned earlier the second and potentially a third wave of lockdowns.
True, that's true. So, Anand, how has this changed the priorities for technology providers, the whole digital transformation? Where do you see coming in?
It's a great question, Shweta. And I think if I take the perspective from what we are hearing from our customers across both traditional banks and new banks, two things have happened very pronounced. A shift to accelerated digitization, right? And that means look at our traditional banks such as UMI in Myanmar or Aya in Myanmar or Wray Bank. What we are seeing there is a shift away from branch. The transaction percentage moving to digital is probably at 80-85% of the total volume of the bank transactions. That's a very pronounced shift. Two is really a shift to the cloud, right? What people have seen is, banks have seen is their traditional business, their continuity plans, their BCPs, the DR plans, the people working from home, their on-premise systems, their networks are not that conducive unless you're a real large tier 1, tier 2 bank. You have built and established these over decades. And you're seeing a lot of them, the tier 3, tier 4 banks across the region is that robustness of people working from home, managing systems, networks. How do you do that? So there is an accelerated look at moving to the cloud. We are seeing that from our customers in Vietnam and Myanmar as well, saying, can I start moving banking workloads to the cloud? Because that gives me better resiliency, that gives me much better operational efficiency. But more importantly, the resiliency and the risk mitigation, which they were caught flat-footed a few months ago. And the third thing is really what I would call as remote delivery of projects, right? This whole thing earlier on, a lot of the operations, a lot of the implementations, a lot of how banks work with vendors, fintechs, with consultants, a lot of it involved face-to-face meetings, a lot of it involved that, right? And this is forced a rethink. The rethink is really how do we do remote delivery? And we are working with a few banks in the region to do end-to-end core banking remote delivery as well. So I think three big things that have happened, right? Now, the neobanks or digital banks, on the other hand, were actually born in the cloud, been there, done that. And I think Greg is going to say that's really his model, right? But this kind of change that we are seeing is actually parlaying itself into the more traditional bank landscape. And I think eventually the world will fall into a hybrid. There's going to be a place for both. There is going to be a place for the cloud in a much more pronounced way. And there is going to be a place for resiliency, remote delivery in a much, that's a key trend. And I think digitalization is here to stay. And that's going to just accelerate. And fundamentally, banks have to rethink how they look at their consumers and how the consumers interact with them. And is that interaction with the consumers is going to be a very interesting horse race for the next decade of how traditional banks and neobanks approach the same problem. Shweta, back to you.
Thank you, Anand. Interesting thoughts, yes. And I do see that there is a lot of focus on banks and fintechs. So, Hock, how has government supported fintechs in the region? What are some of the innovations you see, and where do you see the biggest opportunities in 2021?
Yeah, I think a lot of the governments in the region see that fintech is a way leapfrog their financial services industry. So we see that a lot of help given to the fintech companies, and that is also a reason why the Singapore FinTech Association is able over the last 4 years to build fintech bridges in 40 countries. So it's not just in the region but all around the world. And I think for the year 2021, I think Singapore presents a very unique and interesting use case for digital banks. I think because of the very high requirements in terms of capital and in terms of the need to present a viable business model, we see a lot of consortiums forming up rather than fintechs coming in alone or partnerships. And we see among the consortiums we have ride-hailing, e-commerce, social media like ByteDance. That will, what I think will bring in the scenario-based kind of financial services becoming more pervasive in the region, which originated from China. So you see, it's very much about like that financial services become embedded in the day-to-day life. And then I think that fits very well with the profile in the region, whereby we still have a lot of unbanked and underbanked. And for them, the daily life-to-life activities they carry out, right, that the payments part, the loans part, right, can be embedded into their lifestyle. So I think that will, in part, will drive a lot of this digital bank development in the region. So I think a lot of the fintechs will be in a very good position to capture many of these opportunities. Like I shared that, like digital banks themselves, within their DNA, they are agile. They are likely to build from scratch. They will collaborate. They work through API, through cloud computing technology, and collaborate. So I think the next phase of fintech development in the region will be more vibrant, more exciting. Yeah, so which is why we collaborated with Pauline, BCG, with the Digital Challenger Bank report, is as to act as a reference guide to see how digital challenger banks has operate successfully and not so successfully all around the world. What are the good go-to-market strategies? So I highly recommend to download a copy and look at it. Thanks.
And I think I'd like to add as well about Singapore is that we've developed really, I mean, Hock Lai mentioned it as well as his opening keynote, is that this year is a very special year. We're celebrating 5 years since we had that vision, right, to become a fintech hub, a global fintech hub. And it's really interesting. I mean, the combination of fintechs that we have almost 1,000 fintechs, and the combinations of homegrown fintechs that we have in Singapore is everything from insurance, capital markets, SME banking, retail banking, payments, lending. We've got a really balanced view of types of fintechs. And this year, again, what's really interesting is that already last year was a record year from the equity funding that our fintechs attracted here in Singapore, those headquartered here. And this year already, I mean, we are at the end of Q3, headquartered fintechs attracted 40% more equity funding than they did this time last year, or a 27% as of the entire of 2019. So I think fintechs, what's happening as well is that they're getting, as mentioned as well, we have a majority working in the space. They're B2Bs, but we also have some B2Cs, but they're really being, that equity funding is to fuel that scale up and also to take the opportunity to move into other regions and to develop products. For example, you have just recently, we had one of our RegTechs, Silent 8, that just raised some funding, a Series B fund. And really, this is to continue developing that from an AI perspective, the products to really tackle some of those financial crime issues that the industry is currently facing. So again, a really exciting year, and it really feels like we've really come full circle in the past 5 years and have achieved more than the milestones that we had set ourselves 5 years ago.
Just to add on also, I think the banks are, the incumbents, they are not resting true. I've heard of at least one other local bank raiding their digital bank outfit, ready to employ up to 1,000 engineers. So I think eventually this region is going to be more vibrant than before. I think both the incumbents and the innovators all can thrive in an expanded pie within the region. So I think it's not just the incumbents versus the innovators, but it's both, how both of them they compete while cooperate at the same time to bring financial services more inclusively to the region. Thanks.
Thank you both. And you did bring up an interesting point on incumbent banks. So I want to ask you, Pauline, what's your advice to incumbent banks when they're trying to compete against the digital bank wave in transforming their business, especially on customer expectations? Because that's where we are seeing a rapid shift, and that's where we're seeing digital banks score higher. So what would you tell them?
Yeah, look, again, I would say having got to know very well the likes of Dennis Koo, for example, who launched Tomorrow Bank at EOB, I mean, they're definitely not sitting on their laurels and they're learning very fast. And I think, again, Mr. Ong said, you know, what made your digital strategy, you know, who led your digital strategy, and it was COVID. And even if, for example, I would say if there was even a moment where digital development or any strategy around bringing in new core banking platforms or developing and reskilling your staff to continue moving into this space, that's definitely happening now, and it's what we're seeing. So, I mean, from an advice, from what we're seeing, we're seeing different models, right? We're seeing those incumbent banks who have digital as core of their strategy, like the likes of ING, for example. We're seeing those who have launched digital initiatives like Tomorrow Bank and UOB, and we're seeing those who have transformed themselves like a DBS from the core to really think like a technology company. So I think we've got some very good examples of banks, not only in the region but globally, who have taken this very seriously and are learning very fast.
Good to know. Yes, they need to take it very seriously. So Anand, as a technology vendor, how do you believe these technology advancements are helping banks capture a larger market share and rise above the pandemic?
Thanks, Shweta. And I think Pauline summarized it pretty early on, right? If you take a look, what's happening with banking is the entire disintermediation, right? If you take a look, I mean, how does finance play a role in an end person's life? And that is really, if you take a look, it could be in the lending area, as Greg says, right? It can be very interesting experiences for the customer. I go to a retailer, I go to an airline, I want to buy a ticket. Can I offer a point-in-time loan, which really starts exciting the customer? I'm doing a remittance as an overseas worker. What is that used for? When I go into a retailer and make a payment, how do I do that? What is the most frictionless experience, but also the most useful, because from a point system to an end customer, from a loyalty perspective, how do those experiences come together, right? So if you think about it from a salary card perspective, right, how does an end consumer get that? And I think you have to move on the market to an SME. What are their SME challenges? So when you take a look at an outside-in perspective of the customer, be it retail or be it within SME itself, it's really their journeys. And that journey results in a set of banking decisions. And those banking decisions are products, a combination of products which help the customer but also make money for the bank. The right segmentation of the customer, that's really what happens, right? Technology today enables us to make those decisions, enables the bank to make those decisions. And that is the biggest enabler, the biggest change that's happened in the last few years. If you look at the rise of the cloud, to really start getting interconnected experiences, because your retailers, your airlines, whatever it is, your hotel industry are all online. Can I capture that? Can I have a joint partnership with that? The same thing with your card networks, be it MasterCard, Visa, and all of these aggregated networks. Look at MasterCard or Visa, their market capitalization today is probably higher than most banks in the world, apart from perhaps JPMC or Citi, right? And the reason for it is they've been able to play the data, play the interconnected trends itself very well. So that is what technology is doing. Technology is enabling the banks make those choices, make those decisions. And the end result is better service, better customer experience, better loyalty, which results in your much better cost to asset ratios and all the banking ratios, which help the bank grow itself. So that is really how I see it. It's redefining the landscape. It's just like how Uber or Grab redefined transportation. It's just like Airbnb redefined it. It is that interconnected cloud-based experiences, and that is what is happening in the next 10 years. Is finance will be redefined, and it will happen. And I think banks like TONIK are the frontier in some markets of how they want to do these things, and that's what even Pauline was mentioning. What's happening with UOB? What's happening with DBS? In the region. And likewise, we see these parallels across the world. What Revolut has done, what Monzo has done, what Oak North has done in SME lending. Right? It is that complete radical change which is what technology is helping. And technology will help us get there. And we at Finastra are an enabler of that, along with all the fintechs. It is not just a system. It's along with the banks. It's along with the fintechs to make this. Thank you.
Thank you, Anand. We have a poll questions for our audience. The report talked about 3 key imperatives for digital challenger banks to succeed in Southeast Asia. Let's see what our audience think about it. Be customer obsessed, build and leverage a modern bank technology stack, seek ecosystem advantages where possible. We would like to hear from our audience. And with this, we want to wrap up our session with one last thought from our experts. Hock, over to you. What are the competitive advantages of FinTech have? If you have to detail them out, what would you tell our audience?
Yeah, a lot of the fintechs, they are born digital first, cloud first. So I think their modern stack is definitely their one of their competitive advantage. And the other one is their focus on customer. And customer experience is first and foremost the most important part, right? Because technology is something that could be a commodity, but building that unique customer experience could be their differentiating factor to compete in the crowded marketplace.
Thank you, Hock. Craig, what is Sony doing to differentiate itself in the market?
Yeah, you ask an interesting question with regard to whether it's customer obsessed or the technology stack. I think the technology stack is a tool for operational efficiency. It's a tool for profitability. It enables certain modes of product better than having an in-house, on-prem stack. But at the end of the day, that's not what will make you successful. What will make you successful is listening to the customer and giving to the customer what the customer wants. I think there's a famous quote from Bill Gates from over a decade back who said that everybody needs banking, nobody needs banks. And with technology, we're now kind of getting to that point. If we look at other types of technology, for example, video. Video is getting integrated into other apps now, and basically standalone video is not going to be a thing in 5 or 10 years. It's going to be a function which is integrated into other stuff. I think this is exactly where banking is headed. The things that banks provide, the reason that banks exist as provider of product doesn't mean that that's the product that will be sold specifically by that entity. These will be functions that will ultimately get integrated in utility functions that will support other things that the consumer wants to do. The consumer never wants to take a loan. The consumer needs access to money. The consumer never wants to make a payment. The consumer needs somebody else to get money or to receive money, right? So it's basically the consumer orientation and leveraging technology to enable your integration into other things and technology ecosystem partnerships that will enable you to be successful in, I think, 5 or 10 years. So anybody who is not preparing for that, like the incumbent banks that are not participating in the open banking race, that are not getting their APIs ready, I think the guys are going to miss on that. And ultimately, they will have trouble attracting the consumer, satisfying the consumer, and it'll have a drastic impact on their profitability. If you look at some of the very successful bank examples, the WeBank in China, these guys are fully all about putting their product at the consumer end. So they massively leverage ecosystem partnerships. The consumer might not even know which bank he's using in the background to get his loan or to service his payment. And if you look at profitability implications, these are also very dramatic. The largest digital bank in Europe right now, Tinkoff Bank in Russia, these guys had over 70% return on equity last year. Average return on equity for the banking sector globally, I think last year was about 11%. And average return on equity for the Russian banking sector was even lower than that. So these guys are outperforming their peers, traditional peers, by a factor of 7x on profitability. So that enables them to continue growing, continue investing, and doing things that the consumer wants. So I think consumer obsession is definitely a massive differentiation feature. Banks are very, very bad at it. That's a fact. And banks basically design their products by committee, where lately risk and compliance and many other parts of the organization that are meant to be the brake on product development rule the day. So if you're not balancing these things with what the customer really wants and are not championing the customer experience, you're going to lose out and your fintech competitors will win. So that's basically what we're betting on.
Thank you, Greg. Customer obsession, indeed. Let's see what our audience think about it. Pauline, while doing this report, what were the successful use cases and innovation examples that you've seen in Southeast Asia? Your thoughts?
Yeah, so look, I think that the biggest one for me, so I arrived in Singapore and incorporated my own company in 2008, and I can tell you I knocked on a lot of doors of banks to open that business account. And in the end, it was an international bank, because that's who we were banking in London, who gave me that bank account. And when I met Aspire, Aspire is actually solving for that difficulty of onboarding an SME or a startup in a very seamless way, because they can pass on some of the savings, because a startup company is actually very expensive for a bank to onboard, because they have all of the systems that they need to finance. But somebody like an Aspire, because of the technology that they're bringing in, because of the seamless way that they're onboarding, and all of the partnerships that they have to do all of the different features and services, they're able to pass on these services and these savings, especially to the customer. In this case, being on the SME or startup side. So for me, that's really the key. It might seem very simple, but to Greg's point as well, is that because these you can tell, I've been telling my bank, why do I need to have a token? My bank in the UK, every time I lose it or it breaks, I can't do anything. I can't pay that iTunes transaction of £7 once in a blue moon because I don't have my token. But they don't have the technology actually to do in a seamless way to be able to log in and to make that switch. Right? So I think that is really, for me, it's not so much of a use case, but it's more of how quickly, these new banks are able to onboard companies, especially on the business side, because on the SME banking side, we're really, really underserved. And these are going to be the future, hopefully future large corporates. So I think for me, this is a really exciting space, and more than a use case, the whole SME banking space is one that I look forward to having a challenging experience back in 2008.
Thank you, Pauline. Technology for seamless customer experience. So let's hear the final thoughts from our technology expert on the panel. Anand, what is Finastra's strategy and vision for digital challenger banks in Southeast Asia?
Sure. I think they summarized this, and I think great discussion from Greg, Hock, and Pauline. Our strategy is simple. It's the trifecta of providing a cloud-native core, which takes care of the operational efficiencies, to Greg's point. Really provide for very rich APIs and sandboxes, which can integrate into FinTech. No man is an island. No bank is an island. Right? As simple as that. And each bank wants to grow in their own proposition, their own customer-obsessed proposition itself. So that enabler through our platform, Fusion5.cloud, is a very, very important piece. And finally, data and insights. For us to achieve customer obsession, it's all about identifying the treasure trove of data, which is both in the core banking system and outside systems, and providing a very rich data lake capability and very rich algorithms around it, which banks can enhance, banks can manage, banks can maintain. So for us, it's a trifecta of the Essence Cloud, Fusion5.cloud, and our Fusion Cloud Data Platform that really will help enable the technology stack for neobanks and income banks alike in the region and beyond. Thanks, Shweta.
Thank you, Anand. And with this, we do have our polling results, and I think our panels summed it up very well. Be customer obsessed, 36% of our audience believe that's the key imperative. Build and leverage a modern bank technology stack, 33%, and seek ecosystem advantages where possible, 30%. So it's a very good balance, and I thank all our panelists today for this engaging discussions and for all of you for listening us in. Thank you, and let's connect, collaborate, and co-create.
Thank you so much. Thanks, Pauline.
Thank you. Bye.
Thanks, Greg.
Thank you. Nice to see you all.
Bye.
Thank you to all of our speakers for that truly... Thank you to all of our speakers for that truly illuminating presentation and discussion on the ASEAN Digital Banking Report. As the final item on our opening segment for the Digital Banking Symposium 2020 this morning, we will be gearing up for a panel discussion titled Digital Banking in SG and Beyond. We will be joined by our presenters on this screen shortly, so do stay tuned. Thank you.
Hello.
Chief FinTech Officer for Monetary Authority of Singapore, Mr. Wu Shiwei, the Chief Technology Officer of Huawei Cloud APAC, and dialing in all the way from the United Kingdom, we have Mr. Matthias Kroner, Founder and former Chief Executive Officer, Fido Bank. This session will be moderated by Ms. Pauline Wray, Managing Director, BCG Expand Research, FinTech Control Tower. And without further ado, I will hand over my time to Pauline to make the introduction to the panel. Pauline, please.
Thank you very much. So we have a really interesting panel today. We've got a bit of an echo. Digital banking in Singapore and beyond. A very diverse panel, and I'd really like to, before we start, I'd really like to give the opportunity to the panel to just give us a 2-3 minute introduction about yourselves and your organizations.
Sure. Start from me. My name is Wu Shiwei. I'm currently acting as the CTO of Huawei Cloud in APAC region. So probably Huawei Cloud, this brand is still very new to everyone. We are a new market comer. But actually that we have been doing the cloud business for the last 10 years, but we usually partner with our partners to deliver the cloud services. So from 2017, we decided to build our own brand and build our own network of public cloud. So obviously Singapore is one of the hub and the most focused region for us. We have 4 data centers already in Singapore, so very much looking forward to see the partnership going on in next few years.
Thank you, Daniel.
Yeah. Hi, everyone. My name is Patrick Tay, Assistant Secretary General of the National Trades Union Congress, the labour movement in Singapore. Likewise, also, I'm the Executive Secretary of the Banking and Financial Services Union in Singapore, and in the past couple of years, busy co-chairing the Financial Sector Tripartite Committee, working very closely with our government partners as well as employer partners in the financial sector, looking at how this sector has transformed and how we can attract more people into this sector, and of course grow the talents, and especially upgrading the manpower in the financial sector.
Hi, I'm the Chief FinTech Officer of the Monetary Authority of Singapore. I look after policies related to FinTech and also progress related to the FinTech sector in Singapore and beyond.
And now for Matthias.
Be with you. Actually, I'm not dialing in from the UK. I'm dialing in from Germany. I would say in COVID days, this is a major difference, to be honest. So my name is Matthias Kroner. As you introduced me, I'm one of the founders of Fido, and I was heading it as a CEO. Prior to this, I co-founded a digital discount brokerage bank for Europe. So my experience is 25 years plus of digital, rule-breaking, tech-enabled, and customer-centric banking in the industry. Great to see you all.
Thank you, Matthias, and thank you for being up so late or early. So, look, first of all, we wanted to start the conversation with a bit of the backdrop of the 2 Digital Challenger Bank reports that we've launched in conjunction with the Singapore FinTech Association, and another one looking at Southeast Asia with Finastra and the Singapore FinTech Association. What's been really interesting to know, regardless globally, is that we've seen since 2015 a 200% growth of the amount of digital challenger banks that exist in the world. They take many different shape and sizes. Some of them have a license, a banking license. Some of them have a partner who provides them with that banking license, and some of them are coming from the non-FI sector, like we really see here in Asia, coming from a telco background or tech giants. So with that backdrop, it will be really interesting, Matthias. Why don't we start with you, and hopefully that keeps you awake, to give us a bit of a backdrop of what you've seen and your experience as a co-founder, as a founder of one of the, I think, Sopman, you call him the oldest fintech bank, Fido. Gives a bit of a landscape of what you've seen in the digital challenger bank space over the years in Europe.
Well, looking at me, you can see that getting up in my age in the morning is not that difficult, actually. We need to do anyhow. joking aside, yeah, well, since we founded and started the journey with Feeder, which we applied for license back in 2007, when actually the financial crisis just started, we received our license by the German regulator in 2009, and then finally opened our digital doors in 2010. Since then, it's on the one side only 10 years ago. On the other side, many things developed. Who those days, who would have thought that actually something like entrepreneurship in banking suddenly is kind of getting into the normal? So that is a very surprising, or let me say very motivating development over those last years, and we are very proud that we have been part of that whole development. Having said that, on the one side, of course, we also have to reflect what the current situation is over here in Europe. So McKinsey came out with a study, I'm sorry to mention another one also, came out with a study just some month ago saying that the funding process of digital banks actually did slow down a bit in the light of the COVID-19 development, and we cannot leave that out. Yes, of course, we have mega trends that are in place, like the technological development, the digital development. I'm very happy to see this kind of more entrepreneurial spirit, because that comes with a very specific corporate culture, which is problem statement centric, which is customer centric, as well as setting up new technologies. We heard it in one of the other panels. That the new tech stack is absolutely essential. I only can subscribe that. However, we have to see the overall market development. And I think in the light of the COVID-19 economical impact, maybe it's not number one thought actually on consumer side to change the bank now and to join one of those innovative concepts. However, I see a strong digitalization move within the incumbents. We have non-banking license owned, for instance, let me mention one concept, Yolt, Y-O-L-T. It's a subsidiary by ING Bank over here in Europe, which is operating on the so-called Payment Service Directives 2, PSD2, gaining millions of users by offering data aggregation. So that is one of the examples not having a license. Feeder, the old days, did decide to have a license. Why? We wanted to be in charge for our product strategy and the processes and all the innovation we want to deliver on our own. This is not possible if you use one of the back office partners. So yes, you're absolutely right. There are many ways to skin a cat today. And I would say this huge variation, this huge number of options is one of the most positive developments we did see over the 10 years in banking.
Super. No, that's a fantastic overview, and I think contrasting that and a very different model. So Matthias spoke about having your own license and or else potentially partnering with a bank or a technology company or banking as a service for that license. Be great, Daniel, if you could give us a bit of an overview of how it's played out in China, because again, what we've seen from China is a very different version of the digital challenger bank profile.
Okay, I think in China, you know, the China, the banking is usually quite strict in terms of regulations. So currently, I think strictly speaking, there's only 4 digital banks. That is the WeBank backed by Tencent, and MyBank backed by Alibaba, and then you have WX Bank and iBank, that was Xiaomi and Baidu. So you can see all these 4 banks, they're basically all backed by those large internet companies and technology arms. But though there's only 4, but I think that the idea is not actually new to the Chinese customers, because the newest one, which is iBank, has been there for like 3 years. So if you look at the business model they are running for these 4 banks, they are very much serving one straight purpose, that is to serve the underserved groups in the society. So we are mainly talking about, you know, university students or the immigration workers coming from the rural areas who even don't have a bank account. So there's a huge potential for these banks that to serve these groups of people for their social responsibilities. And they're actually doing exceptionally well. Of course, they have the technologies to actually do that. So they heavily rely on technologies like cloud, big data, blockchain. You all know those buzzwords. But they are actually, if you look at how they operate, I think it has been already proven that this is the right direction, and this is going to be has a huge potential in the next 10 years. But of course, the regulation is still there, and in fact, I think you probably noticed the Jack Ma's speech the last few days. So it's probably there's still a balance between the regulation and between what you can do with the technology at your will. So we'll see how it goes. That's
correct. No, and I think we've been observing all of the different models here in Singapore as well. So before we go into digital, more into digital challenger banks and what's happening in Singapore as well, I think we don't have a lot of digital challenger banks in Singapore or in the region. I mean, we've TONIK, Greg from TONIK was here earlier, and he was talking to us about the POC that's taking place in the Philippines, where they're the first digital challenger banks in the country. But before we start with that, Southeast Asia has emerged as a FinTech hotspot. So Submandu, it would be really great for Southeast Asia as a FinTech hotspot. Give us a bit of an overview, because we're no strangers to disruption. Sure. We have a lot of payment, lending fintechs really serving the underserved and allowing them to enter that digital economy.
Okay, sure. I'll start from where Matthias started. He said that there's a McKinsey report which talks about that fintech during crisis have slowed down. It was almost opposite in many sense in Asia, broadly in Southeast Asia. And the primary reason behind this is because the Asian countries are digitally ready to take advantage of these challenges. So right through the crisis, countries which had digital infrastructure were able to tap into this better. The e-payment went through the roof because most of the Asian countries have very strong, robust payment system. They were ready for a challenge like this. And if we take Singapore as an example, the e-payment just went in multiples of in times of transactions. So generally speaking, during the crisis, Southeast Asia truly came stronger. Our consumers were ready for such shift. They responded in a way we expect them to in a crisis like this. Fall back to e-payments, use your e-commerce to buy your goods and services, and the fintechs were traditionally designed as a B2B fintech in this market. So they were providing the tools and services required for this, either in SME or shops or e-commerce or a bank, to respond to such challenges. So by looking at your number, which you reported, you saw the growth. While every market was seeing struggle, in the Southeast Asia, the investor came pouring in to put more money for the growth they saw in this market. So in that sense, I think Southeast Asia definitely stood out very strong, and this actually going to create the necessary platform when you come out of the crisis to come back to the as close as previous normal in terms of economic recovery. So what we saw now, what is going to see future, are quite strongly related, because this has set the momentum to recover faster. And I think that's a huge positive for me from a fintech standpoint, because I would say, with keeping aside the unfortunate pandemic, we have created an opportunity for ourselves to shift almost close to a high percentage of digital economy.
Correct. No, and actually that brings us really nicely to the next point I wanted to discuss. So we're going to have 5 digital banking licenses granted later in Singapore, and we have a number of other countries in Southeast Asia drafting their own version of a digital banking license. But in your opinion, then, back to that, us enabling, what are the regulations that are conducive for this form of innovations?
Sure. I think the timing of our licensing is very critical, because we could have chosen this 5 years back or 3 years back, but we chose to do at the 5th year of our fintech journey. Why? There are few fundamental things have to be put in place before you issue license. First is a digital infrastructure which allows one of the most basic of a digital bank, how to onboard customers remotely. MyInfo is a public infrastructure which allows banks to onboard customer remotely. No point giving a digital bank license where the processes and infrastructure forces you to open account manually. So having the infrastructure before was critical for us to think about issuing licenses. That's step one. Step two is getting the ecosystem ready for such shift. 5 years into FinTech, most of the consumer have started expecting, like China, a high degree of digital services. So the consumer expectation is now ready for such kind of product and services. Third, the regulation. And the regulation it never came in a single chunk. It came through a series of shift. You look at our payment regulation, it was completely redesigned to support a need to support innovation and also support a kind of activity the payment innovation is bringing, they're regulated properly. We made changes to our online sales of insurance, life policies. We made changes to our crowdfunding views. We made some changes to our views around ICOs. So there are a whole set of regulations which were fine-tuned in this last 5 years so that we are ready for a structure which allows a shift like that. And lastly, to end, is the talent pool. Because no point having a digital bank where the talent is not ready to support it. So that also came along with 3 to 4 years of our journey, so that now by design the ecosystem is ready for a new kind of banking license, and hence this creates the opportunity for us to think differently.
Correct, and it does feel like we're coming full circle with this 5 years. I think it's a really it's an exciting year to be here. So Patrick, I think Sobhamdu mentioned a few times about the skills required as well, but also over the 5 years, the number of people that FinTechs as well has created job force. Can you talk to us a little bit about that? Because I think we've just had some numbers.
Yes, that's right.
announced.
So actually, slightly more than 3.5 years ago, we had the industry transformation maps for the financial sector. I co-chaired the financial sector tripartite committee and was quite hands-on in working in the financial sector, in particular the banks, the insurance companies, as well as asset management. And we have seen in the last couple of years a lot of work gone into in upgrading and of course upskilling talent at few fronts. Firstly, of course, you see a greater focus in cultivating ICT talents in our institutions of higher learning. At the same time, also not forgetting that there are also those who are entering this sector or this space mid-career. So there's actually a lot of mid-career programs, and I'm proud to say that in Singapore we have quite very strong funding, both from MAS as well as Institute of Banking and Finance and from the government in supporting companies and individuals to pick up the skills. I think this is the extra delta you see to help companies and individuals to pick up some of these skills and knowledge required. So as what Supendu mentioned, we are in a way quite primed to prepare for the upcoming digital banks licenses, as well as the upcoming digital banks that are going to come into the space. Myself being from the labour movement, I'm really looking forward to it because I see it as one big opportunity amidst COVID-19, all this downturn and recessionary pressures, to look at potentially some quite good job openings for manpower. And it's not just ICT or deep tech talents, although we know it's going to be predominantly that, but also because of the requirements of the digital bank licenses on sector penetration, customer outreach, and aggregating demand. So I see a lot of potential for those in other sectors, adjacent sectors, be it sales, business development, market development, including digital marketing, etc. So all these talents, I think we have been providing a lot of support measures in the past couple of years, and it's time to reap some of these.
No, and that's really interesting. And then I'd actually like to bring it back to so we're going to have 5 digital bank license announced, hopefully towards the end of the year. What are the types of skills then? So assuming we're, I don't know, in terms of numbers, it's going to be in a each bank is going to require quite a number of UI, UX designers. I
Correct.
mean, full stack developers, in my opinion, trying to hire some, it feels that they're a bit of a unicorn, very difficult to find. So it would be really good if we start with you, Daniel, for what does, and yourselves, I mean, you have a whole center that does training and to be able to have that available talent. What does it take to launch a digital bank, and how do you find those individuals? So Daniel, to you. Oh, sorry, Simon.
Sorry. Okay, that's fine. So yeah, you mentioned that the full stack developers, UI, UX, I think that's essential. But I do see there's another type of specialist that is very much in demand. That is the data scientists.
Yeah.
You know, with when we talk about digital banking, it's all about running the business online and get rid of manual process as much as possible. For example, the 4 banks I talk about in China, the first business they launch is always about so-called microloans, where, you know, talking about Alibaba, for example, they release this so-called 310 benchmark. That means you spend 3 minutes filling the application form, the data engine will take 1 second to process that application, and then there's 0 human interactions inside this whole interaction. That means you are leaving the back end, the big data platform, to decide whether this person is qualified for a particular role. There's no need for any human to review or to make any decisions. So in that sense, you will leverage the data, of course, that's coming from the ecosystem. That's the first step. But you also need a number of experts that both qualified in terms of their financial expertise, as well as their understanding of data, understanding of the technology, to make this whole process work. So my personal feeling is that's definitely this market will be in huge demand once we release these 5 licenses.
Correct. And Matthias, I think we still see you there. Matthias, what would be really, really interesting as well is, from your perspective, is to get your views on the skills that are necessary to launch a digital bank, and the availability of that skill set in your experience. I mean, I think it would be interesting to see how that pans out here.
Yeah, well, first of all, allow me to kind of point out a point that Subnandu mentioned. I do definitely fully agree that Southeast Asia is the region to be today, right? So this is when, even in my old feeder days, we had an office already starting in Singapore. And I guess that's also one of the reasons why I'm so privileged to be part of that round here. I fully believe in the strengths of the region and the dynamics of it. And if there's one region I do strongly believe recovers first of the whole pandemic situation, this will be it. Absolutely. And then having that recovery based on newly digital infrastructures is outstanding. I think this is a huge advantage. We will suffer on the other side a little bit stronger from that, including our incumbent structures over here in Europe. So setting up a digital bank, actually, as I did it twice already, I would fully agree with the honorable gentleman from Huawei to say, yes, in the meantime now, we have to focus very much on data intelligence. However, we should not forget about the simple, let me say, skills of banking, right? Even that a machine could give you and provide you a loan within a second, and believe me, we did this in Europe as well. It is not said that your risk management decision is right. So you need to have, for instance, just let me pick out some. For instance, a risk management that on the one side is covering the banking know-how and how risk management at a bank with a known balance sheet and so on is working on the one side. On the other side, of course, you need to understand the opportunities and options that you now have in a modern data-centric environment. Of course, you need to have the people that are absolutely in having the skill to create such a data-centric infrastructure, a digital one. I would say it's also then moving on from one kind of solid tower that we maybe have had in the past, a solid tech stack in the past, to a more open banking environment. Just think about the Singaporean initiative of APEX, on which you can pick and select various partners to kind of combine and create your own bank. As much as I remember last year's FinTech Festival, APEX gave a demonstration how you can create your own bank within 10 days only by choose and pick the relevant components. So I think it's even this kind of mentality and skill set that you need to have to select those partners, to make those partners kind of work together like in a big orchestra, so that it's not only a melody, but it's a big piece of music. The technology is existing. I think the artwork is what to make out of it.
Great, fantastic. Sabanu, I think you want to say something about the space, because I think anywhere I go in the world is
no, my point is that just to, for Patrick's pleasure also, given his the NTUC, last 5 years, the kind of, we have 10,000 plus FinTech skilled workforce working in the industry. This is just net new.
Yeah.
There's something unique about this skill set and these people. They are quite different from a traditional incumbent employee. They're typically job seekers. The kind of people who work in the FinTech industry are also entrepreneurs in their mind. They're far more empathetic to customer problem, because the founder and the small team which came together are working on one problem of a consumer which they are truly passionate about. So you have built a skilled workforce in Singapore, which is our FinTech workforce, who are far more connected to consumer. They know certain problems very well. They have a good understanding of technology, and their ability to serve customers is far better in the digital world than anybody. So Singapore is in a many ways privileged to have built this workforce, and they will come in a big way, in a very strong way, when the licenses come into production. And if all the people they're looking to hire, this is already a ready-made pool of skilled worker who can be tapped into. From that perspective, I'm quite proud of our ecosystem, because now we have a set of employees who think for the company, think for the consumer, and think for a problem progressively to solve it in a better way. I think that's the clear differences in terms of skill set and workforce we have in Singapore.
Yeah, no, I absolutely agree with that. I mean, I think I've traveled the world, and whenever I say I'm from Singapore, I think the first thing they say is, oh, you have Sopman Dumohant, you have the MAS, you have FinTech, and everybody who comes here generally are and want to work in this space generally come because they want to be part of that ecosystem, that part of that village, so I think I just want to say a little bit of a word, because I feel like we've taken a few lessons from what's happening globally from the digital challenger bank perspective, but also especially from China. And one of the pieces that I found extremely interesting when looking at all of those who put their hands up for the digital banking license here in Singapore is the fact that they're coming from all sorts of industry, social media, e-commerce, gaming, of course financial services, but also retail, ride-sharing, telco, mobile internet, automotive marketplace, just absolutely everywhere. Right. So what do you think? I mean, they obviously bring a lot of things to the table. They bring richness of data. They bring digital savvy customers already. They bring retail customers. They bring SME customers. So all of that access to new potential customers. What do you think is the opportunity for Southeast Asia?
No, I think you're asking any one of us.
Yeah.
No,
go for
well,
it.
a quick
Go for
one.
it.
We should not forget, even during crisis, my experience with the online portals have been horrible. So we should not miss out the need for human skill set in solving this problem. I strongly believe in a hybrid model. People ready for a digital world, upskilled, skilled up, so that they can complement to technology and serve consumer better. I think we should not lose that sight, even if you're progressing to truly a digital economy. Just a quick point on that question. Sorry, Patrick.
Yeah, I just wanted to add into what Supender mentioned, and your question is also that I think this digital challenger banks, particularly in Southeast Asia and the upcoming, of course, digital bank license, which you alluded to, coming from different spaces, I think partly, of course, emanates from the fact that I think one of the requirements, should I say, for this bid will be looking at customer outreach.
Yeah.
So you definitely need to work with a partner which has a strong customer base or potentially a strong customer outreach capability. And of course, the other part of it, of course, financial capability, but something which Alex brought up earlier, very, very relevant, serving the unserved. So I think market penetration into, particularly in Singapore, where you have easily more than 70% of companies in Singapore are small and medium enterprises, and increasingly more micro, small and medium enterprises. And this is likely going to be the order of the day. You're not going to see big companies blowing up overnight. You probably see some mergers and acquisitions, but you will see more SMEs growing to larger entities, and of course micro SMEs moving up the value chain. So I think very, very important is the diversity of capabilities to serve the diverse needs of the customer, as well as both from a retail and consumer point of view.
Correct. Yeah, no, I think, I spoke earlier about an example that I experienced myself coming to Singapore as an entrepreneur in 2008 and finding it pretty much impossible to open a bank account here. So I had to have a little bit of help from my company in the UK to help me open a bank account here, and I believe that's still the case for some entrepreneurs as well today. So that's really important. So back to the opportunity Southeast Asia represents, because we saw in some of the numbers that the Philippines, Indonesia, as well as Vietnam, I mean, it's everything between 50 to 65% of underbanked.
Yes.
So
I would say in the world of digital economy, there are three kind of ecosystem. There's a data producing country, there's a data refining countries, and the data consuming countries. Southeast Asia is highly populated countries, are large data producing countries. They will consume a lot of technology, they'll consume a lot of services, which will create an enormous set of data set which allow innovative company to come and solve that market. So having that prime data producing capability of these countries will be a huge attraction for many innovative companies to go there and set the services. But keep in mind, there's also regulation which is coming which will stop certain behavior. Things like access to data will not be that free. People are getting far more aware of the responsibility on how the data is being used. Countries are putting regulations in place to ensure the data is protected. That free for all getting access to data, in some cases abuse of data will soon become very tough. I think that's a huge shift. So anybody thinking about coming to Asia should not think come to here and abuse data, because the countries are getting very much aware about such risk, and they're going to protect their respective data.
Yeah, interestingly, yesterday in Parliament we just passed the amendments to the Personal Data Protection Amendment Bill, looking at how possibly to allow our digital banks to find ways to innovate and manage data responsibly, ethically, at the same time also within a regulated framework, and of course customer consent and privacy.
Yes, absolutely.
So I think we are all primed for this space, and definitely I think increasingly with changing consumer behavior as well as demands, the management of data and privacy of data, coupled with the need for innovation and customer outreach and customer service standards, will pose a big challenge to many jurisdictions, but at the same time also opportunities as well, as we look at potential spaces we can move into and potential collaborations between different companies from different sectors and different providers.
Yeah, finding that balance between being conducive to innovation without stifling innovation. I think it's something that I think we've done really well in Singapore.
Yes.
In a way. Okay, so I think I'd really like to continue talking about the skill set, because I think this is something again that keeps on coming up, and especially since the licenses are here. Can you Patrick, are you able to? So Hock spoke earlier about some of the programs that they had put in place with the Singapore FinTech Association to help reskill some of the population. Could you talk to us a little bit more about those programs?
So there's actually a whole, as I alluded to earlier, the industry transformation maps and all the manpower plans and the skills framework. And of course, IBF came out with a report last year, a very, very extensive report, more than 250 pages on how data and automation affects jobs.
Yep.
So, and also, of course, the launch of the skills framework just exactly a year ago in the financial sector. So there's a lot of space and a lot of possibilities that are coming up. Transform jobs, redesign jobs, new jobs, and therefore there's been a plethora of training in this space, not just for those in the currently studying in the institutes of higher learning, but at the same time also for mid-career individuals. We have seen the likes of Institute of Banking and Finance driving the Technology in Finance program, and which is very, very in demand. And of course, the various programs which Singapore FinTech Association has partnered with many of the institutes of higher learning and our polytechnics as well as and universities. So everyone is in that continuing education and training space because we recognize that this is definitely a growth area. But I just wanted to just highlight the point that I think there's a lot of anticipation about the digital banks and what kind of jobs it offers. I mean, quick thinking will be, you probably need deep tech jobs like what Alex referred to earlier, full stack developers, UX UI designers, and all the standard kind of software development techies. But I beg to differ. I don't think it will all be deep tech people. We need people with domain expertise. We talk about market penetration. So I see opportunities for those with adjacent skills. For example, like digital marketing, business development, market entry, possibly even compliance, and of course sales, and so all these are actually possibilities which will present opportunities. And therefore, if you are trained or you have skills in this area in adjacent industries, we know this COVID-19 pandemic has caused quite a strain. Many countries, including Singapore, is facing a recession. And we know certain sectors where are deeply affected. So actually this presents some opportunities for them to segue into some of these adjacent opportunities. And not just tech, like I said, but in particular areas where you have strong domain expertise and experience. I'm sure when we try to look at market entry or consumers penetration, it's going to be new opportunities altogether.
So Matthias, want to make sure you're still with us. Keep on. So just to bring you back to the conversation, then I think, look, Submandu and Patrick mentioned some really interesting points there, and we talked about the skill set, but actually I think what would be really interesting is to get your views on this data piece, because the EU was one of the first ones to look at that personal data piece, and I think there were massive projects from a compliance perspective for a lot of the banks that they had to invest in a couple of years ago. So what's your perspective here, and what would you like to share?
Pauline, allow me to maybe add one more sentence to the talent topic. Actually, I would say that digital banks not only request existing job profiles and in a maybe deeper way, and as Submandu pointed out very rightly, in this kind of customer-centric way. That's not only the case. Last year, and it's even more, this is what I want to say. Last year, I had the opportunity to participate in a workshop with Philippines Union Bank in Manila, and the head of HR introduced us to the development of how that incumbent bank transformed into a digital bank, and what they had to create had been 60 new roles for the org chart, actually jobs they did not have before and had to be created because the new digital environment requested new job profiles. So there's even coming more, that's number one I wanted to add. Number two, what I wanted to add is, yes, those digital banks shall be around to also support what I would call the offline part of the ecosystem. At FIDOR, we had a community in which those users had the opportunity to actually exchange their experience, teach each other, work on actually what we would call financial illiteracy, support each other, and so on. So we've been the first bank that needed community moderators that needed those people that are doing the service in such a community aspect, actually, which is again a new profile which is growing with those digital concepts. So I just wanted to add that because I think, and I fully share the view, that the digital development is not only strengthening current actually movements, but also requesting, in the sense of talent, new roles, new job profiles. Having said this, of course, I want to answer your question. Yes, well, let me say it like it was a stiff effort over here, and believe me, all the lobbyists did cry out because this seems to be the end of the world, that suddenly somebody wants to protect customer data. To be honest, I did not understand it, and this stiff regulation was needed because, as sometimes, and in Europe it's most of the cases, regulation is a response to market developments. So obviously there had been some very critical developments on the market, and we, most recently Facebook announced actually thinking of it as a threat to say, listen, we will leave Europe if customer protection remains as high as you want it to be. Well, I have to say, if that is the case, we will try to live without Facebook. And we will surrender, we will survive, I guess, we will not surrender. I think customer protection and data protection is essential, is absolutely essential, because otherwise I foresee a development that consumers will create something like I call it data allergy. They will, like with organic food, they want to know that you behave properly and compliant with my data, and even maybe strengthening my consumer position to say, whenever I have the opinion that you, the company, shall not use my data anymore, I just pull the plug, I turn the key, and you cannot access my data anymore. To me, in my customer-centric thinking, this is all too natural. The data belongs to the customer, not to the company, and this is how we shall behave.
Agree. I absolutely agree with you. And I think, okay, so we don't have a lot of time, and this is a question I'd really like everybody to answer. So I think all of you gave a really good overview of, it's not all going to be AI, machines, but if Isaac Asimov was sitting here today in this panel, how would he imagine banking in 10 years? And let's start with you, Matthias.
Yeah, well, you have to honestly share with the audience that you prepared us for that question. And I dig deep into what I found out is that there is a kind of quote space for Isaac Asimov already. So you have days of reading all this. It's really amazing. And
you have to. It's such great books. Yeah.
Absolutely. So I selected one actually, which is maybe also a little bit of reflecting the current, I would say, social media-based society discussions, and including the current American situation, which we have now with the elections and so on. So I selected the following quote, and I may turn a little left to read it. Isaac Asimov said, "If knowledge can create problems, it is not through ignorance that we can solve them." And this is what I think in today's world is very important.
Nice, I like it. Sapmandu.
Look, if you asked this question before the crisis, I would have gone crazy with the response that everything will be appless, everything will be digital. But crisis has made me to think and pause in many of this aspiration we have. I think we need to slow down the process of creative destruction, primarily because the world at large is suffering immensely. There are data out there which shows massive destruction of income. People will take years to get back to normal level. So we got to be a little thoughtful in our push for all this transformation. We need to take along people in a very slower trajectory than we thought before the crisis. That's one. The second part is that we have still a large unmet need in our society, especially for the old age. Pension plans are still unfulfilled needs which has to be solved for. Yeah. I think these are the huge task in front of us to solve. I think we've got a little slow down, take a pause, and be a little more kind to people around us and start moving a little differently than we would have thought before the crisis.
Right, interesting.
Yes, Isaac has a love for robots. I think what you're going to see in the space, particularly the digital banks, I mean, whatever that can be digitalized and robotized will be digitalized and robotized. But actually, more importantly, I mean, I've not read all the entire collection of Isaac's book, probably one or two of them during my secondary school days. But I remember this famous propounding of Isaac of the laws of robots. And I think one important thing is we all know that many things in this world will be robotized or mechanized or automated or even digitalized. But more importantly, there should be a human powering or human mind powering behind it to ensure morals, conscience, and ethics.
My feeling is so the whole debate is really on whether the robots can take controls, whether the robots can have their own sense of feelings to make decisions. Where I think it's already happening nowadays is about the AI or robots is actually gathering the information, prepare the evidence so that as humans can make a decision. But I think in the next 10 years, we probably should decide how much decision power that we should hand over to the robots so that they can act 24/7, they can act on behalf of us. And then we're talking about what the ethics and the rules that the robot should behave. So I think that would be very interesting if Isaac's here and thinking about that.
Correct. No, thank you. And look, I think I echo what all of you have said, and if I use this panel, for example, I think I haven't been in a panel with other people since March, and I've just been on Zooms and Teams, and it's the first one, and I can't tell you, and Matthias, we wish so much you were here, but I can't tell you how good it feels to be able to just, read from your faces, not on your expressions, or just, feel the movement. It's fantastic. So I think I echo that. We're not going to go full digital. We still need humans around. Well, with that, I think we're finished for this panel, and thank you.
Thank you.
Thanks for having us.
Thanks.
Thank you very much for having me.
Bye, Matthias.
Thank you, speakers, for that truly illuminating discussion on digital banking in Singapore and its extension beyond our borders. Commencing now is a keynote speech presented by the grand sponsor of the Digital Banking Symposium 2020, Huawei Cloud. We have Mr. Eric Lin, Director of Digital Transformation, FSI EBG, Huawei Asia, to share his views on how digital banks could develop a continual business model by adopting advanced technology. This session has commenced at 11:55 a.m. and if you would like to stay tuned, do click on the next session button that is located at the bottom of this page. Thank you once again to our speakers from this morning, and do enjoy the rest of the symposium.